So I'm just looking at a trade, and this is a very interesting one. Let me just start screen sharing, because this is to do with looking at the structure of the market. So if I come over to the harmonic scanner on the hourly, you can see there's a new scan, which is a buy scan off the D point. It's completed its Elliott wave. That's 1, 2, 3, 4, 5, hence that sharp drop down there on the hour just to complete the D point. And now on the hourly, you can see it's coming up, and it's at the entry point on the hourly there. If we look at trading view, it's up at 990. It's just below the quarter theory point. So if I show you that on this chart, this is a very important line of resistance. And this is the final bit of the Elliott wave. I'm on the 5-minute there. And if you look at it on the cash trap chart, that's on the 5-minute as well. Then you can see it's come off the Bollinger Band, and it's just coming up there. So if we come over to hourglass, you can see that on our currency strength meter, the USD is it's just come up. It was at about 9. It's come up to 10. Now it's up at 13. And CAD, Canadian dollar, is the stronger currency. It's called a put. You've still got the buy, and this, I think, you see this buy, sell, buy. It's because it's turning on that harmonic scan. So you've got mixed signals here. You've got a put, but you can see the volume on the candles just coming up across that channel there. And we're at 980 on the price here. Let me just look at the price on here, 990 on there. And we've got 2 minutes 34 left to run. So I'm not predisposed to take that put, because when I first started Forex, I learnt about the longer time frames, 1 hour time frame analysis. And at the time I was using scanner and pitchforks, which are trend lines drawn off the XCD. So they'd be pointing upwards. I haven't drawn this yet on the scanner. That's the X at 29th of January. So I could do that. So we come to the hourly. So if I'm going to draw this latest scan, and I do post them in my group, let me just hide that and look at where the scan is so that I can show this to you. So I just need to check on here. It's that one there, USD CAD on the hourly. So get my little pattern thing, put the magnet on. That's there to the next high point. To the next low. Oops, to the next high. To the next low. And then we put a pitchfork on here. X, C, D. So it doesn't matter what strategy you are using, but you will notice that the traders that we follow on the Go Live TV, they will be on shorter time frames, but they will be very aware of how the market is moving, and they will understand what we call confluence. So whatever's happening on the shorter time frames, whether that's 1 minute, 5 minutes, 15 minutes, is it playing out over the longer term trend? And they will work backwards accordingly. So when I learned pitchforks, we would look at, it was a hybrid strategy, we'd look at 1 hour time frame analysis, and then we would be on 1 minute entries. But the 1 hour time frame analysis formed the basis of the strategy. And then within that, they had to conform to a certain number of pips from C to D, and each leg would be a minimum of 20 pips, and that was to do with our risk to reward ratio. So I'll just make sure I've drawn these on correctly, and then we can go back. So you can see now it's moving up above that quarter theory. This is a moving average and it's turning round, and you will see that the currency strength meter will move up accordingly as price starts to solidify this scan. And normally on the strategy I used to do on Forex, we would wait for 20 pips confirmation to make sure that the scan had solidified, because if you look at USD JPY, you can see was it USD CAD? Oh, it's just redrawn because the red sell candle there on the hourly, it dropped down further and that formed the base point. So you may have seen on the shorter time frames, the 5 minute on the hourglass, that it called a put, a call. It said call, but actually price suddenly went down, and you notice the time that was on the hourly candle finishing the completion of that Elliott wave, because these are to do with waves and angles, the reversal points in the market. These are charting 5 reversal points in the market. So it does not mean to say that the strategies we're using on the lower time frames are invalid. You may have tested things thoroughly on the lower time frames, but you need to understand the longer term time frames as well. Okay, so I'll just finish drawing this one, and then we'll go back and see what hourglass is telling us. Doesn't matter so much on the B and the A points because you haven't got a pitchfork on them. They just give you, this just gives you the shape of the actual harmonic scan. That having been said, I do like to put them on properly, just habit. So we'll just finish this, and then it's just an example to show you that when the professional traders are talking about how 3 candles, like 3 candles moving on a lower time frame, they've actually looked at the confluence and they've looked at what's happening to confirm the move on the lower time frame by understanding what's happened on the longer time frames. So once I've got that done on the 1 minute, I lock it on, and now I know this will be accurate forever once it's drawn on properly. So come back to the hourly and I can show it to you there, and you'll see me post these in the group I've got where I talk about pitchforks and the harmonic scanner. So here we have this scan, and it's only moved at the moment, it's moved 8.2 pips off the D point. So on the strategy I learned 20 pips and it will have solidified, and then what happens is it comes back to it breaks, and then it comes back, retests the D point, usually not always, and then it's good to go. And you can see that this moving average, the orange one, is the current one, this is the 15-minute one, this is the 1 minute one, and you can see that that's still showing that it's selling. So what's got to happen is this has got to come down and start turning up, and most indicators are what we call lagging indicators. So having given you this 1 hour time frame analysis, which, as I say, the professional traders on Go Live will all look to see generally how the market is moving on the longer time frames, which are stronger than the shorter time frames. Let's come back to see what USD CAD, which is at 76%. It's getting a bit late in the day for trading, 8:30 UK time. It's at 7005. So it's just above that orange dotted line, that quarter theory. And if we come over to the, show you, here you are, so you can see it's come off, it's bottomed out. That was the end of the Elliott wave. And it's just doing, it's at 010. It's just coming off those middle moving averages. There's a line of resistance there. and that's on the 5-minute chart. So there's 12 5-minute candles in one of these candles on the hourly. So there's 12 in 12 candles. So we're zooming in, like looking at your hand closer up, okay? And here it is coming up. So you don't have to look and draw scans and do what I'm doing. It's just to give you an example of how longer time frame analysis is used to show the traders that we follow. They are looking at these Elliott waves. They are looking at how the market is generally moving, and that's reflected in our currency strength meter. Now, Canadian dollar is still stronger than the US dollar. And if we come over to Hourglass, it says US dollar 16 weaker and Canadian dollar 56. Yes, absolutely. So you'd want to take puts. You don't have to always look at the longer time frame, but this is in response to people thinking, well, I don't think maybe that shorter time frame analysis is always accurate. It is accurate, but it can be weaker than the longer time frame analysis because that's still calling a put for a sell. But we know from looking at this that it's solidifying into a buy scan. It's finished its downward move, and it's like an oil tanker. It's going to take a little bit of time. USD, you can see, is now at 16. When I came on here half an hour ago or so, it was down at 9 or 10. And you can see here on the 5-minute how it is moving. It's moving up, and it's 006. It's above that quarter theory. So we've got 2 minutes 47 left to run on this put. It's saying buy along here. So you've got mixed signals, which is because it's 2040. Oh, UTC +2. Let me just change that to my local time zone. So 100 hours was here. And it finished that rundown. If you remember, I showed you, it just finished that quite a long rundown and then bottomed out there to complete that Elliott wave. It's done that now, and it's on the turn. So sometimes when you say, oh, this isn't working, these are mixed signals. I've got buys here, but I've got US weaker than Canadian dollar, but the US is creeping up. It says put, and let's go to trading view. It's at 010. This can be why. So you need to understand the context of the market, that it moves in waves. They're called Elliott waves, and it's always repeating patterns over and over and over again. They are the same pattern. The same pattern on the hourly is the same pattern on the 4-hourly, the daily, and conversely down at the 15-minute or the 5-minute. You're just seeing more wrinkles in the chart. So as I said, you've got one candle there. That red one is an hourly candle. That red one is an hourly candle. But when you come over to see it on here, there it is, that green one. That was that last push down on the hour, and it just completed to the D point. If you come to the 15-minute, let's just magnify it for you. You've got 4 15-minute candles make the hourly. There's the 100-hour candle. So 1, 2, 3, 4 down to 15-minute, 100, 1, 2, 3, 4, and then at 20:45 it finished its rundown. And it's just bouncing around that quarter theory at the moment. So this is what you need to understand. So it's just 7.7 pips. Let's come back down there. And if we come to the 5-minute to show you how the market has moved. So you've got 12 5-minute candles, and you can see this EMA here, exponential moving average. It's not a 200, it's called a 62. And you can go into the details of that. It's just different from the one we use on Hourglass. They're all different, obviously. and you can see it's bounced off the quarter theory. It came down for some more puts, but now it's coming up, and it's giving you all these candles tell you a story. So there, it made a move up on that 5-minute buy candle, and it wicked off it. But here now, it doesn't like the selling. So you've got it can't. It's trying to move up. It's completely stalled, and that's the half hour. If you look below, market timing, that's the half hour, and it's trying to push down, but it could fail. It could decide it's going back down. As I say, when I traded this strategy, I wait for 20 pips and for it to be above quarter theory. And these pitchforks are very accurate trend lines. They're based on Fibonacci. These reversal points, the scans are based on Fibonacci, and they have different names. This one's butterfly, crab, sharks, the D points can move a lot, bat, Gartley, cipher. They have different names based on the reversal angle where they reverse. So this if that's 100 up there, it's reversed there at about 50% or so. I don't know. Christopher Terry does masterclasses on these, and it's come back up to 77% or 88.6 before it's come down again. So those are the technicalities of it. I'm going to look on Hourglass. It's given us another put. And what price is it called? Let's go and analyze that. It's given us, and USD has dropped back slightly at 13. It's late in the day now, remember, on the markets. 996. So it's called a put at 996. The US dollar is weaker than the Canadian dollar, but you've got mixed signals. You've got buys. You've got it right in the oversold area down here. So in terms of currency strength meter, if you've been point system, if you've been looking at taking this trade as a put, you'd have 1 on the currency strength meter. You would have had 2 there as it crossed below, 3 there, put for the 4. You haven't got that. And if we look at lines of resistance, it called it there. So you could have got. So it was a nice trade. It's coming right back down to this level. So let's have a look on our scanner. It's right back on that D point, and it's just coming to test that D point. So this is what I call a cheese wedge. So when I'm thinking, when I'm using this strategy on Forex, then I would never take a trade in here. It's testing the D point again. I would never take a trade in here because you can get caught in here in this price wedge trap. I would wait for price to turn back up above that 27,270.00 quarter point area, and I would wait for price to be above that moving average. So I'd want to see this moving like that. Sorry, that wasn't meant to be down there. It's meant to be like that. So you don't need to follow this analysis. Obviously, Cash Trap works on its own. But the point I'm making to you is that the professional traders will all be fully aware of how the market is moving, and they will be aware of all this. And that is why you can sometimes get the mixed signals, because it could be market timing, as Evan Cabral says, the hour and the half hour, or it could be because, as we're seeing here, we've got price actually finishing its move, and you can just see that on the hourly. So it's probably it's a blue buy candle, and it's probably will solidify at that area. I mean, I don't know. I wouldn't take a trade, as I say, because of that at this time of day anyway. But that's quite a big sell candle there. But it's, I find it very, there we are. It's just bottomed off that line of resistance, and it's coming back up to that moving average. So normally, you see, we can take our trades in here and follow the currency strength meter. this isn't really the purpose of this video. The purpose of this video is to show you market context and time frame analysis and Elliott waves and reversal points and how the market moves in terms of when you're down on the smaller time frames, it's the same pattern. So on the hourly, you'll have, if I show you it on here, just, oh, I'm on the 5 minutes, sorry, let's come back to the hourly. So on the hourly, let me just get rid of that one, it's an old scan, which is still valid, by the way. So if I show you this, this is on the hourly, get a little brush thing. So that Elliott wave, I'm going to draw it the other way around as if it was going up because I'm got the mouse in my right hand. I just find it easier to draw. So an Elliott wave would be 1, this is on the hourly, 1, 2, 3, 4, 5. Sometimes they can be 5 to 7, but that's essentially an Elliott wave. And then if you were down on a lower time frame, say this line was a 15-minute, it would be 1, 2, 3, 4, 5. And then if that line is the 15-minute, it would be 1, 2, 3, 4, 5. Sorry, it's very badly drawn, but it's the same principle, the same pattern. It's just you've got more candles in it and you are looking right down at a much more detailed area. I hope that makes sense. So the professional traders are looking at the overall move. Most of them default to the hourly. And as we know, some traders trading over much longer time frames, looking at how the market is moving over sometimes weeks or months. And we're right down scalping at the lower level. But it's all taken off understanding the waves in which the market moves. So I'm just going to come back to the 15-minute chart on this scan. And you can see price. Let's just put it on the magnifier there. So touch the D point, wicked off, opened here, down again to that pitchfork, a buy candle, wicked off it, opened there, up to quarter theory, wicked off it, tried to push down again, can't do it, come to the 5-minute, wicked off, can't do it, coming up, and then the 1-minute, it's just coming up above that 62. This is the current moment in time. So there's your D point. You can see how many, 1 minute we've got 60 candles will make up 1 hour. So that was 20:37. So 21:37, there's an hour. So there's 60 candles here. So there's your break and your retest of the D point. So you're good to go in terms of buying this once it's come past quarter theory and turned above the 62. So in terms of a trade, if I was looking at this on my harmonic scanner and pitchfork strategy, I would be doing this, a long position for a buy. I'd be looking to get, I'm not getting, don't get into Forex trades at this time of night. 20 pips up to here, which takes you to there, around about there. We just always do 2 to 1. You know, you're usually looking at the next major level, so you'd be looking up there, but it can vary. And then 10 pips, which covers you nicely on, probably don't even need that much, it covers you nicely on your confirmation of your 62, your quarter theory and your pitchfork there. But the entry point is here, it is not below, whilst you've got it selling under that moving average, and you've got these two acting as a ceiling. So you want price to be pushing up like this and go. So there's your hybrid analysis, your 1 hour time frame analysis, but a 1 minute entry, and it's the same thing when we are using something like cash trap. Matty Pips has looked at his lines of levels of lines of support and resistance. He's looked at where price has been. We look left to see what we're going to do right. We look left to see what we're going to do right. We look left. And that's what Matty Pips is doing when he draws channels and lines. And that's what Les does when he looks at daily, 4 hour, 1 hour, and works his way down, because the higher the time frame, the stronger the move. And that's why those lines are highlighted where they are there. This one is a strong one it's got it highlighted 27661. Let me come to the, put it on the 15 minute. Just have a look at where 27661 is. Somewhere around there, which is, you can see that line of resistance was a line of support. You'll hear Les talk about, and Matty Pips, how, look at that. All that, if I hide the, just hide that for a minute. You can see that was all support all along there. It's marked as a major line of there. It's marked as a major line of support and resistance, and that's because of this and this here, where it was support as well. So that's how we look at understanding the charts. But obviously, when we're using their strategies, they've done all this. Here's the scan from that C point down to the D. They understand this. They know all this. They've done all this analysis. So they're saying simply with the algorithm, get in at this point for a put, blah, blah, blah. But you need to understand what you're doing and why, and not just say, I don't think this strategy works because those particular candles did not move that way on this lower time frame. There are reasons for it. Yes, of course, sometimes the market does what the market does. Wild moves, and we won't win 100%. It's physically impossible to win 100% of trades, even if you're a $200 million trader like Christopher Terry. But that's what's happening. So I'll just put the. Let me just put my pattern back on, and then I'll publish this in my group, in the Forex Dreamworks group. So I want to come back and look at Hourglass. It's coming up to the hour, so I certainly wouldn't recommend taking trades at this time of day. So USD's dropped back to 10, Canadian dollar's still at 56. It is calling a put, 1 minute 25 left, and it's at 996. So this time of night, it's just struggling below that quarter theory. But what you will find is as we come to the close of market, you'll get all the spreads moving things wildly. I've never traded, I don't trade Sydney, but you can trade midnight onwards. What you will find is that US dollar will get stronger as this harmonic scan starts to move it up. It can fail. It's I don't understand why my ruler isn't working for measurement on there, but at the moment it's moved off that D point 8.2 pips, and you want it to move to 20 to show it's solidified, or at least on the strategy that I learned. So that's what's happening here. You've got buys here. It's saying puts. It can't break through. It could be time of day. It can't break through that quarter theory. It's a mixed signal. You've still got the US dollar weaker than the Canadian dollar, dropping back from 13 to 10. It's still showing you that here on FinViz. But that is why. It does not mean the strategy doesn't work. It doesn't mean that this is rubbish, this algorithm. You just need to understand, to give you the confidence to know when to take or trade or not, what's happening with channels channels and Elliott waves and how the scanner moves, but you don't have to learn all that Forex stuff, but do pay attention to the training, Josh Lee and Brandon Boyd, and the Sunday night or early Monday morning one with Matty Pips is well worth attending, because that's the beginner session, and I do try and get on that now every Sunday evening. It's very, very good. So I'm going to stop that now and just see what TradingView says. That says 012 hourglass has just called a put again at 27001. So just that little decimal, that pipette above quarter theory. It says it's overbought. Here it says buy though, but it's saying put there. And you know, you've got mixed signals, but there's very good reasons for those mixed signals, as I've demonstrated by looking at the scanner. So that's it from me, and I hope that was